everyone, and welcome to this Market Outlooks this Tuesday, 31st of March, last day of the month. Seen a lot of movement this month in equities, seen some big forex positions, crypto. There was a drop a couple of weeks ago. Currently, as of today, stock market overall looks like it's ready for some pullbacks. A few potential long-term crypto setups, forex setups on the horizon, but need more development, and crypto overall bearish. So we'll start here where we left off last week. This is a trade I've been in now for 2 weeks, euro dollar. You can see here higher time frames. I'm looking to play this overall current market sentiment with the dollar strength being a demand, therefore strength against the euro. So that's part of the macro. But anyway, if we look here on a technical perspective, you can see this month with the last day is going to close out with this sort of doji, with this nice wick rejecting the 50 EMA here pretty aggressively. Hasn't broken that since 2018, 2 years ago. We had this bit of a break here, false breakout. You can see here it's clear on the daily chart. Remember, bearish trend, lower low, lower highs. Now, you look at this, there's the fake out. People would have been looking for longs here with a higher low, but no, didn't happen. Continued, wiped them all out, wiped out anyone long that was looking to go long here, and now it's made a clear lower low, lower high. Second day confirming this bearish run coming into effect. So we look here on the intradays, you can see that, well, I was managing it from the 4-hour chart because it was a long-term position, and that's part of my rules. Long term, I manage off the 4-hour. Shorter term, I manage off the 1-hour and very aggressive 5-minute and phase lines. But you can see here on an hour chart, we came down. Excuse me. Gave double bottom, bullish divergence. Pop up, no higher high yet. Reject, come down. Higher low. Yes, it is just higher, but it still is a higher low compared to these wicks here. Higher low, higher high, higher high, higher low. Moved up, higher low, higher high, higher low, higher high. And should have first exit would have been at this 1-hour break. If you're managing from the 1-hour chart, trailing the 1-hour 50. This bullish engulfing. I actually took an ABO on this. That was my entry, funnily enough. Targeting this 4-hour 50. I closed it out here, and you'll see it. You can see it here, the 5-minute chart. I may have covered that last week. And I also took this quick 1% move to the downside, just looking for that third rejection of that descending triangle at the time. Now, got this breakout. That would have been the first exit, trailing the 1-hour here. I didn't exit it there, and I'm still currently in it. So I negated my rules. My overall, the next exit would have been here on this 4-hour, around 8 a.m. my time, morningish. This pop up here, could have exited it there for around 3%. But as you can see, I held, because this is an overall really long-term target based on fundamentals and the technicals, the demand for the dollar, etc., and everything else that's happening in the world. And overall, it is still bearish. If you hide this 4-hour 50 here, you'll actually see that it is, just a sec, remove the 50 EMA. Yes, it had a very big pop up there. That's the false breakout. The higher time frames that we saw, it still clearly made a lower low, lower high. Left shoulder and right shoulder. Lower right shoulder, that being the best and strongest form of a head, in the head and shoulders type of patterns. So looking to play that right down, first target around 105, and overall target is monthly lows of, so first target here 105, and then overall long-term target months, maybe even a year or so, let's say, down here to 87, which also lines up with the Fibonacci extension you can see here, 0.272. So I was unfortunate that this didn't stop me out, because I had my trade bulletproof and just left it at that. 1.9 pips to my entry there, so very close. And Euro has a very low spread, usually 0. During high liquidity, 0.2, even as low as 1, I've seen it. So that's Euro dollar, holding on to that. Now, more recent trade, Aussie yen short. Similar thing. You can see how bearish Aussie is here. Barely even could pull back to the 20 EMA, and very bearish. Australia's going through tough times like most places in the world with this virus, unemployment, just the stop of the economy. The yen is more of a safe haven currency. You can see here back in 08, had this big drop over 3 months. So we've had one candle so far. So, like, if it does that, this could easily go back to previous lows here. But for now, targeting this previous daily low around 60, and show the higher, lower time frames. You can see it's a bearish movement, pop up, ignore that 4-hour 50, come up, and I entered here on this nice high test, which on a 5-minute break, you can see here on a 5-minute chart. So I entered down here, waited 5 minutes before that 4-hour and 1-hour candle closed. Stop loss in hindsight, maybe a tad too tight. However, it's already at 55 pips, but the safer target would be above there. I guess with overall market sentiment, the Aussie being so weak, and we saw here, could barely even get to the 20 EMA, barely here, just so much bearish pressure. Came up here, we haven't pulled back to the 50, but you'd expect that 20, nice high test, move sideways, and it's looking like it really doesn't have momentum to break through it, so bearish divergence. Great risk to reward. You can see almost about 12.5% potential. Safer stop, yes, above here, would have been around 6%. But I like it. I like the risk to reward, and look, if it goes against me, so be it. I accept the risk. Alright, next trade, dollar CAD. Not in this yet. Waiting for a bit more development. You can see We had this aggressive pop to the upside, rejection at around previous high here, perfectly actually, on a monthly time frame. Pinpoint, one spot 4685. And now, when we have such an aggressive move like that, it's quite common that the price doesn't pull back all the way to the 50 MA. So it didn't. So it came back to the 20, similar to Aussie yen. Just so much bullish momentum to the upside. Came to the 20, rejected it yesterday, closing with this nice bullish engulfing. So I'm just looking to further a nice little play targeting back around here near these highs at one spot, or anywhere one spot 4.5 to 4.6 region. Looking for a bit more on this. Hasn't pulled back, but it's looking like may not even pull back. 6:20 now. London session's open and it's dollars come in pretty aggressive here, looking rejecting this 4-hour 50. So may not even get an entry on that, but that's all right. Happens. Just want to have a look here at something for a sec. 146. Bad, bit high. Best act on the 5-minute break, because you can see, once it has there, like you're already almost 20 pips too high, and that makes a big difference. Sometimes price doesn't pull back how you'd like it to, and that's what happens in trading. But it could. You enter it here, chasing it, comes down, gets near your stop, and you could have got an even better entry because by then the 5-minute 50's pulled down. So we'll go to the dollar index now. You can see the dollar index is gaining some strength. Once again, sort of inverse to that, that of euro dollar. Look, low, high, previous high, higher high, higher low. Second day into it, sort of a mirror image to that of euro dollar. Exactly the opposite. Very interesting. So that's also part of my trade analysis thesis, you could say, and part of the reason why I'm still holding euro dollar strength coming in here. You'd expect that during these times of selling off, people are selling off in order to get liquidity, and they're selling to US dollars. It's in demand as it's the world's reserve, and the US takes up a large amount of the total world's economy. And the stock market SPY, see, these are all very similar equities. Had these drops and now pullbacks. How far will pull back? Let's wait and see. It's still pretty bearish. It could pop up a little bit higher than reject. I'm not looking for any longs on here at all. I don't want to touch that for a long. I'm just waiting for further development to then look to position in to capture that continuation to the downside. That's SPY, which is one of the highest volume stock market ETFs, S&P. Now, I'm not sure if I touched on these. I may have. I took profit on my inverse SRTY Russell 2000 inverse ETF here. Nice profit. Took break even on SPXU. You can see I got in a bit too high. Ideally, you get in on the break here to that high, bit over 100%. Real estate, sold that. That was a nice little, that was a nice position on that. Remember, I don't trade these. These are just spot buy ETF. 1% of my capital I buy. Just buy it and sell it, basically. And this is inverse, so if the real estate market goes down, this goes up. So it's a way to make, basically capture the bearishness we had in the market recently in order to be exposed to it. So that's around 85% move, not bad. I also sold my volatility longs. These were beautiful. A bit annoyed with myself I didn't sell on this first bearish candle, because you can see like we've had pretty much all aggressive bullish days, very small red candles, and this was the first big bearish candle, which says to me that, well, from the break here, we've popped up 800%. Back to the highs here. So, in hindsight, should have sold here on the 20th of March. But that's what happens. This isn't in my time zone as well. I saw this when I woke up in the morning and closed it down. So, bought into these other ETFs here. First being DFEN, bought in that last week. It's up nice. What, currently 37%. Bought into Finks at 10. And I bought into Energy. This is very undervalued, very cheap, sitting a bit over 30%. Looking for that pullback back up here. These are a few others I was been looking at, but to be honest, I don't really want to long the market at the moment. Just keep my cash. Look for further short side entries. Now Bitcoin, quick look here. Similar pullbacks happening. Expect to pull back, then reject these wave 5 continuations, then look to get in long. Ethereum, similar. Bitcoin halvings in May, and you can see it is rejecting this 50 EMA, so it'll be interesting to see what happens. Ethereum, double bottom. XRP, similar to Bitcoin, except it's broken down below that 20, so the 50 will be up here, but hasn't had 50 candles, that's why it's not there yet. You can see that here on a weekly and daily, so actual bit of a pullback, then look for the wave 5s. So that's pretty much it. Short and sweet, to the point today, guys. So euro dollar I'm in. Long-term trade, first target 105, next target long term 87. Took Aussie yen today short. Very bearish, the Aussie yen being a safe haven. Massive momentum to the downside, struggling to even get the daily 50 MAs. Watching dollar CAD for a potential entry. Wait and see if it happens. There's dollar strength coming in. Stock market pullbacks. Inverse ETFs taken profit on. Volatility taken profit on. Volatility goes down, remember, as the stock market goes up. Bought into some of these defense, fintech and energy sector last week. That's all I want to be exposed to. Don't really want to take any more bullish ETFs to the up, there's just a lot more room to the downside than the upside. Yes, they've had drops, but I don't think it's over yet. So I'm just got a couple, but that's enough. 3-4% of my overall capital being exposed to the long side, and very short term, couple of days, maybe a week, no more. I'm looking, zooming in on an intraday chart just to see what's happening there. Got alerts set. See this line here. If it starts to drop, and I'll sell. Currently it's looking bullish. Double bottom, breakout, high, low. Now, some of you may be asking, how do you find these? etfdb.com, as I've mentioned to you earlier. It's a great resource. It'll tell you the holdings, the top 15 holdings for different ETFs and the volume, etc. So if we go here quickly to, this is when I was looking at, for example, PIL, Healthcare Bull, so you can see the makeup here. These are the holdings. We go here to PIL, it's pharmaceuticals. I was looking to buy that, but I didn't. If we go here to DFAN, see the companies that ETF is made up of. And then you can go, if you like, and look at all these charts to see if all the price action right now is pretty much all doing the same sort of thing. So let's have a look, UTX. I'm going to show you here, for example, DFAN. See this breakdown, low, low. So DFAN, we look at the first company, UTX. Let's see what it looks like. So breakdown, pullback. Couple more. Boeing, same thing. Breakdown, low, pullback. Lockheed Martin, same thing. This bearish breakdown, pullback. So you can see across the board they're all doing similar things. However, defence as well as technology, compared to a lot of the other sectors, haven't broken down on their monthly 50s yet, which says to me that of the overall stock market, technology sector and defence sector are the stronger sectors within that. Overall S&P and banking sector broken monthly 50s. Industrials broken monthly 50s. Transport broken monthly 50s. A lot of the things are broken except these sectors are defence and technology for mine. Pretty sure that's the main two. Can't think of any others. So also still holding my silver, gold, long ETFs. That's about it, guys. So yeah, hope you enjoyed this. Until next time, be patient, wait for the moves, wait for everything to align, protect your capital, don't over risk, just be patient, because at the end of the day, all the big dogs, that's exactly what they do. Quite often you'll find that if the time you want to get in, if you wait for that bit longer, sometimes it can give you an even better entry. So anyway, take care, guys, and over now.